Kiran, good afternoon to you. Let's get started. Our first query is on ICICI Bank. We have Sanjeev Gupta, who's written to us on Twitter. He has 1,000 shares of ICICI Bank, which he's held for the last 10 years, and now wants to know what he should do with this at the moment, and whether or not he should switch out to another stock, preferably HDFC Bank. So, Kiran, what would the charts of ICICI Bank and HDFC Bank both tell you? And is it a wise decision for an investor to switch from one to the other?
No, I think, well, first of all, very good afternoon and congratulations for a brand new office that you are doing this show from.
Thank you.
Yeah. And looking at charts of HDFC and ICICI Bank, ICICI Bank is still in good hands. I believe that we'll see a further upside from current levels. A small dip could be possible to a level of around, say, 420 to 25 levels, worst case scenario. But I think we should take a U-turn from here on itself. If the Nifty, for that matter, 11,450 is a crucial resistance for today and tomorrow. If this level is taken off, we'll see the banks falling up. If you look at the bank Nifty, it is giving a bit negative divergence for now. But however, we are around the support. So basically, ICICI Bank and HDFC Bank both are poised well on the charts. Nothing to worry. From the long-term perspective, I believe 390 would be my stop loss for ICICI Bank. And for HDFC Bank, the stop loss would be at around the 1145 mark. Both the stocks would perform in the days to come, so nothing to worry. Remain invested is what we would suggest.
Mrs. Vijaya Lakshmi, who calls us from Hyderabad with a query. Good afternoon, Mrs. Vijaya Lakshmi.
Yeah, good afternoon.
Tell us, how can we help you?
I sent the query about Dwal Pharma.
That's right.
I sent the query about that I want to hold the stocks, or I have to, what do you say that, sell the stocks. I want to know.
Okay, so I'm reading out your query. I believe you have 150 shares of Thirumalal Chemicals, 200 shares of Hudco, 81 shares of NBCC, and 125 shares of Tata Motors DVR. Is that correct?
Yeah. NBCC also, it's also 150 shares.
Okay, you have 150 shares of NBCC as well. Any particular stock that you want our experts' recommendation or opinion on, or do you want an opinion on all the four stocks that you've suggested to us?
Four stocks?
All the four stocks. So, Kiran, we have Thirumalal Chemicals, we have Hudco, we have NBCC and Tata Motors DVR. What do you think one's strategy in all these four stocks should be?
See, if you look at the trend of each one of them, all are in downtrend, but specifically Thirumalal Chemicals is an exit, Hudco is also an exit, and NBCC is also an exit at current levels. I don't see a V-shaped recovery in these counters, and more pain can be there in the days to come. There's a lot of disruption that has happened in the automobile sector, and having said that, Tata Motors is a hold from my side, just because it is near the support. So Tata Motors DVR is what the investor is holding on. We have a very strong support at around the psychological and the technical level of around 4950 levels. We are very near to it. That's the reason why I have a hold on this counter. Stop loss will be 47, but I believe that one should still hold on. Once the stock moves above the 62-63 mark, we will see a good momentum catching up on this counter. So for now, it's a hold, strict stop loss. Above 63, we will see a good rally.
Okay, the next query comes in from Vardhaman Jain, who's written to us from Mumbai. He has 125 shares of Dabur, which he has bought at 430. Wants to know now whether to hold or to sell. Kiran, your thoughts on Dabur?
The Dabur is basically a very strong counter. FMCG counters are doing pretty well. This counter, for that matter, has a next resistance at around the 463 mark. The day it crosses this will start catching momentum, and the next target would be at around the 500 mark. This will be the first resistance level. The chart structure is pretty good. We have been trading in an ascending channel for the last 6-7 months. Looking at the chart pattern, I believe one should still hold on. My stop loss for now, with a medium term to long term perspective, would be a stop loss at around the 430 mark. First target would be 490, where a review should be taken. But I believe there's more headroom for this counter in the days to come, looking at the sector performance for now.
Kiran, you track both stocks. Any preference for either, and can he remain invested in the hope that things are now on the up and up?
See, Britannia basically consumption counter FMCG sector, which is doing pretty well for now. This is a bit laggard as such, but the chart pattern is pretty good. Right now, we'll have a hold on Britannia. He has purchased it a bit higher, 3047, but I believe that these levels will definitely be taken off in the days to come. We will have a target of around the 13,900, 4,000 mark with a 6 months perspective. For now, I would suggest a stop loss at around 2,800. As far as Tata Motors is concerned, here also I believe that we are near support. That's the reason why we should hold on to this counter. For Tata Motors, my stop loss will be at around the 98, 99 mark in the two-digit figure. But however, 135, 136 levels are important, crucial supply zone. Whenever these these levels are taken off, we'll see a sharp rally which can take the counter to around the 160 mark. So hold is what we suggest over here.
What would your view, Kiran, on Maharashtra scooters be?
As you rightly said, this is just a holding company for all three companies, Bajaj Auto, Bajaj Finance and Bajaj Finserv. If you look at Bajaj Finserv and Bajaj Finance, they're doing extremely well on the charts, and this is what will lead to Maharashtra scooters to still perform from current levels. So we still believe that in the medium term to long term, we'll have a big headroom from here on. 4100 is my stop loss. We will surely cross 4700, which was its earlier swing top, and we should move ahead further. So my belief is we should have a target of around 55, 5600 with a 6 months perspective.
All right, and the last query today comes in from Trishit Dang, who's written to us from Agra. He holds some shares in Vodafone Idea, so 4460 shares, which he has bought at about 18 rupees odd, a long-term investor, and wants to know what to do. Kiran, this is already a stock which has seen quite a brutal correction. Should you just exit? I mean, is there any point to even holding on, with the fear that there could be further wealth erosion?
See, for any investor, what is more important is return on investment, or ROI that we call as. So this stock is very bad at ROI for the last so many months or years to be taken for. However, we have got a good base building formation which is happening at around the 4 rupees 90 paise mark. We are trading at 5 rupees 80 paise. So someone who would want to take that risk of 1 rupee and still hold on, it's fine. No fresh investments for sure. But there's no point in holding on this stock, because the problem is there is no pattern for now which could suggest that there is a good headroom from current levels within a specific time period. So having said that, I would give an exit on this counter. There are so many stocks which are giving breakouts. You can move to those levels which are still giving good returns. So I have an exit over here. For someone who insists that he should hold on, 4 rupees 80 paise would be my final stop loss.